What is going on, my friends? Ryan Williams here, back with another one, and I've got to say, this week on the market was practically the opposite of what we encountered last week. All three major stock indices saw a huge rebound, and I can tell you just within my own portfolio, I've reached new all-time highs, which we'll touch more on later in the video. But first, we are going to be talking about two dividend stocks that appear to be at pretty cheap valuations, both of which we have talked about pretty recently in some of these videos. However, this time we'll actually be going through and attempting to find the fair value of both of these companies using a simple discounted cash flow model just to see how undervalued they really are. Anyway, before we get rocking and rolling, if you guys are stoked to talk about some dividend stocks at a discount today, go ahead and give this video a big thumbs up. Also, if you enjoy learning more about dividend stocks, then I'd ask you to consider subscribing to my channel. At this point, I'm putting out 2 videos every single week on the topic of dividend stocks, most of which are different analyses, kind of like what we're going to be doing today, as well as inside looks into my own dividend stock portfolio, which we will also be doing today. So if that's at all up your alley, then go ahead and hit that subscribe button for me. Anyway, thank you so much for doing that. And now, without further ado, let's get into it. All right, guys, now because we just recently talked about both of these stocks pretty in depth, I'm not going to spend a ton of time diving through the financials. Instead, we are going to be focusing on some other metrics today, like the share price performance, the dividend stats, the current valuation of both of these companies, and we'll take a look at a few metrics to define that, as well as the calculated fair value of both of these companies using the discounted cash flow model like what we talked about in the intro to this video. All right, guys, and with that said, now that you know the game plan, let's jump over to the screen and just get into these dividend stocks. All right, guys, now that we are here on the screen, we are going to kick things off by talking about Altria Group, ticker symbol MO. But before we get into the share price performance, I have a little bit of other business to take care of real quick. Just hang tight with me one sec. Did you guys hear that? That was for all of you guys out there who don't think I actually have coffee in this cup. I gotta tell you, every time I do have coffee in this cup, but you don't ever see me sip from it because it's a little bit weird to do on camera, I'm not gonna lie. But hopefully now you guys believe me, especially you, Zaldaf. You're the biggest perpetrator of this rumor, I'll tell you what. All right, guys, now with that out of the way, let's get into Altria's share price performance. So in the last year, it is up a measly 3.75%. It's not had much movement in the last 365 days. Now, if we zoom into the last 6 months, we can see that MO has really taken a hit, guys, down 10.64% in the last 6 months. And then in the last 30 days, they're down about 0.5%. So down just a little bit more in the last 30 days. And then in the last week or so, they're actually up 1.5%. So they're making their way back up. But overall, guys, Altria Group has not been performing very well. And if we zoom out to this 5-year mark right here, we can see that this has kind of been the trend for this company for some time now. I mean, in the last 5 years, they're down over 32, almost 33%. So this stock has taken a couple steps back in terms of capital appreciation in the last handful of years, which could be good depending on when you bought into it. I mean, if you're just now buying into this company, it's good to see it a little bit down in share price. Maybe you can get it at a discount. But then again, if you bought this company back in 2016, 2017, 2018, you're probably not the happiest. You're probably hoping for a little bit more appreciation in that period of time. At any rate, guys, if you are just now buying into Altria Group, then I think right now is a pretty good time because you are getting a super sweet dividend paying company at a, relatively low share price. And with that said, let's jump over to the dividend page real quick and take a look at Altria Group's dividend stats. So scrolling down here just a little bit, we can see that Altria Group has a forward dividend yield of a whopping 8.07%. This company is known for having such a high dividend yield, but it goes even further than that in my opinion. All across the board, the dividend stats I think look pretty good with the exception of this payout ratio, which is a little bit high, sitting at 78.04%. And I'll tell you guys what, along with this high dividend yield, this company also has a pretty nice 5-year CAGR on the dividend, sitting at 8.59%, which is higher than I feel like you'd normally see with a company with such a high dividend yield. I feel like there's usually a little bit of a trade-off. You either get a high yield and like a lower growth rate, or vice versa. If a stock has a high 5-year CAGR, usually that comes with a lower forward dividend yield. So this company has a little bit of both, which is great. And it also has a very reputable dividend growth history to go along with that. 52 years of consecutive dividend growth, making Altria Group a dividend king. And actually, while we're on the subject, both of the companies we're talking about today are dividend kings. All right, guys, now that we got the dividend stats out of the way, let's jump over and take a look to see how this company is currently valued and how that's looking. So Seeking Alpha gives it an A for valuation, which is awesome to see. And I think once we go through these couple of metrics, we'll see why. So starting with the forward PE ratio here, sitting at 9.67. This is looking pretty good in the single digits. It's looking very low. This is also considerably lower than this company's 5-year average PE ratio by about 30%, which is great. And then also compared to some of the other stocks in this sector, it's about 50% lower than those. So, and then scrolling down, guys, taking a look at the forward price to cash flow, this is currently sitting at 8.87, which is nice. That is awesome. Single digits, right where we want it. And this is also considerably lower than the company's 5-year average price to cash flow. So all across the board, Altria Group is definitely looking to be at a better valuation than it has in the past, which is no surprise considering what we saw when we were taking a look at this company's share price performance. In the last 5 years, guys, remember it's down over 30%. So really, like I said, it's no surprise to see both of these numbers lower, the price to cash flow and the PE ratio. All right, guys, now that we have taken a look at these few quick metrics, now we are going to jump over to my dividend portfolio spreadsheet tracker and go over to the intrinsic value calculator, which is what we're going to use for the discounted cash flow model. And we're gonna try and come up with a fair share price to purchase Altria Group at based on the expected cash flows this company may receive in the future. So let's jump over here and let's go over to the simple intrinsic value calculator down here. And as you guys can see, we're zoomed out pretty far here. I'll zoom in a little bit there. Everything here is blank. Now, I'm still kind of tweaking this calculator and I'm very new to making these sort of calculations. So bear with me and also let me know in the comments if there's a way that I could do this a little bit better because like I said, very new to doing this. So guys, first things first, we're gonna put the company's ticker symbol up here, so Altria Group, and you can see some of the data loads right there. The company name and the share price, the current share price of the stock is right there. What we are going to do next, guys, we are going to input the free cash flow data for Altria Group for the last 4 or 5 years. Now, obviously, we're not all the way through with 2021 yet, so we'll use a little bit of an estimation based on the cash flow that this company has reported in the last 3 quarters of 2021. So I'm actually gonna just skip ahead and input this data. It might take me a couple of minutes, but if you guys are curious where to find this, you can go over to Seeking Alpha, go over to the financials page, and then go over to the statement of cash flows to find all of this data. So I'm gonna jump back over here. I'm gonna put that data in real quick, and then we'll continue on with the video. All right, guys, now that we have put in the free cash flow for the last handful of years for Altria Group, you can see that this spreadsheet has filled out just a little bit more. And what these are right here, these are projections into the future for the next 7 years and beyond for what the free cash flow might look like based on a certain rate of free cash flow growth, which we can actually input and change these metrics based on what we think is going to happen for Altria Group. So we can use this 5-year CAGR for the free cash flow as a reference point, and based on what it's done the last 5 years, we can estimate that maybe across the next 7 years, the same is going to hold true. So let's put this number in just for kicks and see where that puts us, guys. So you can see that from inputting this number here, which is obviously the same as right here, which was pulled from this data, it changes all of these numbers over here. And then we're gonna tweak this a little bit more after we input some more numbers to see kind of how it will affect this intrinsic value right here, which is going to be the final calculation we are trying to make. So we still have a couple of pieces of data to input. We need the net debt, we need the cash, and we need the shares outstanding for Altria Group. So to do that, guys, we're gonna jump back over to Seeking Alpha, go over to the financials page real quick, and then jump over to the balance sheet right here. And like I was saying earlier, guys, if you're looking for the free cash flow to input into the calculator, just go over to this cash flow right here, scroll down to the bottom, you can find the levered free cash flow. No big deal, super easy. So for the balance sheet, guys, the first thing we're gonna look at is the cash and equivalents right here. So in the last report, it looks like they had almost $3 billion of cash on hand. So we're gonna put this number into the spreadsheet. So 2957 is going to go right here, 2957. And then next thing we're gonna look for is the net debt. So let's scroll down all the way to the bottom and we're gonna find the net debt right here. So that is about 25 billion. And we'll put that into the spreadsheet right here. So 25,170 million. Okay, and then the last thing we need is the most recent shares outstanding. So that is gonna be right here, 1,838.6 million. So 1,838.6. There we go. All All right, guys, now that everything has been input on the spreadsheet, you can see that we now have an intrinsic value calculated for Altria Group. So based on the numbers we've input so far, this calculator is telling us that the intrinsic value or the fair value of Altria Group is $52.39, which means when you compare that to its current share price of $45.25, Altria Group is 13.63% undervalued, which is good. Now we can actually change these two numbers to manipulate this intrinsic value and maybe come up with something more conservative, or maybe we're taking a little bit of a risk. So maybe we think this 5-year free cash flow is off. Maybe we think Altria Group is actually gonna grow by 10% free cash flow every year just into the future. So we can change that to reflect that. And we can see that it gives us a different intrinsic value or a different fair value for Altria Group. By increasing this number right here, it means that Altria Group is even more undervalued than what we initially calculated. So we're gonna put this back to 6.31% because that's based on these numbers right here. We're just gonna stick with that for now. Now what I wanna do is I wanna jump back over to Seeking Alpha and see how this number compares to maybe what some of the analysts are expecting for Altria Group. So we're gonna go to this ratings page right here, and we are gonna jump over to the Wall Street Analysts rating. And those guys give Altria an average price target of 52.77, which really is not too far off from what we calculated right here, guys. So we are pretty much in line with what the Wall Street analysts are anticipating for Altria Group, but they also have some other ranges here. So they give it a high share price of $68 even and a low share price of $45, which is about where it's at now. So based on the average and what we calculated, we are pretty spot on with what's going on with Altria Group right now. So that pretty much wraps it up for this calculation of Altria Group. And hopefully this fair value calculation right here made sense to you guys and will come in handy when you guys start using it. Like I said, this is kind of actually my first time running through this, definitely on camera. So let me know if there's any way I can improve this calculator or if there's anything I can do to improve these calculations and make them more accurate. Let me know in the comments below. But now let's jump on to the second stock of the day. All right, guys, now the second stock we are gonna be talking about today is Leggett & Platt, ticker symbol LEG. Now you guys might remember this one from one of my recent videos. I think it was like the best dividend stocks to buy in December, or the best dividend stocks to buy under $50 per share. I think it was that one. But we went pretty in-depth on this company in that video, and it's good to be talking about it again. I know we just kind of recently covered it, but this is a great company to own, and it's a dividend king, just like Altria Group. So getting into the share price performance of LEG, you can see that in the last year, it is barely up. 0.84% gain in the last 365 days, which is really nothing. But before we jump over and look at these other timelines, you guys already know it's a similar story to Altria Group with what I think is an even steeper slope. It is really coming down in share price, doing nothing but going down. And then real quick, just looking at this 52-week range right here, guys, you can see that it is making its way towards the bottom, and it is getting very close to seeing a new 52-week low. So we'll see if it actually gets there. Looks like it comes up a little bit, then it's going down a little more, and it doesn't look like it's quite touched into the 30, the sub 40 range, but we'll see what happens. Anything can happen, guys. The stock market has just been so crazy lately, as you guys know. But anyway, back to the share price performance. If we go over to the last 6 months, wow, down 22% in the last 6 months. That is insane. And then in the last 30 days in the last month, guys, it is down another, I think it's down. Let's wait for this to load. Yeah. So down another 3% in the last 30 days. Another drop. This company just keeps taking hits in share price. And then in the last week or so, guys, in the last 5 days, it's up just a little bit, 0.9%, nothing crazy. But at any rate, guys, the slope's really steep here. It's really coming down in share price. And, LEG looks to be at a pretty good valuation. I mean, the PE ratio, which we'll talk more in depth on in just a moment, it's not as low as Altria Group, but still 15.37 is not a high PE ratio. I think anything under 20, about 20 or so, that's an acceptable range in my opinion. And I know a lot of others subscribe to that rule of thumb as well. So now let's jump over to the dividend page, guys, and see what they have cooking up there. So scrolling down, the 4 dividend yield is 3.99%, almost in the 4% range. And in fact, recently it was, when the share price was just a little bit lower, this company did have a 4% dividend yield. And I would not be surprised if this share price gets even lower and we see another 4% dividend yield from LEG. And even at this point, even at 3.99%, let's just round it up to 4%. Who are we kidding, guys? I think that's a pretty high dividend yield. As far as dividend yields go, 4% and above is what I personally consider to be a high yield. That's a very respectable dividend yield. Now moving on to the payout ratio, guys, 61.31, which is just a skosh higher than maybe what I'd like to see. I kind of like to see 60% and below, but 61.31, that's right on the fringe there. we'll take it. It's not the end of the world, to be honest with you. Now, moving on to the 5-year growth rate, it's not the greatest, 4.44%. That's not entirely beating inflation. I think the most recent numbers coming out for inflation was like 6.3 or 6.8%, something along those lines for the month of November. You guys might know that off the top of your heads. If you do, leave me a comment below and let me know exactly what it is. But not quite beating inflation as far as the 5-year growth rate goes. And jumping over to the dividend growth, guys, I know Staking Alpha gives it 28 years of consecutive dividend growth, but this company is a dividend king, and I want to go back over to the summary page real quick and show you something. So I know that because there's multiple analyses on Staking Alpha that call it a dividend king. So LEG, an underappreciated dividend king, right here. LEG, the dividend king has risen, and then also right here, LEG is soon to be dividend king. So I think they just became a dividend king this year in 2021. So gotta love that, guys. And now with that said, let's scroll up and get into the valuation of this company. So Staking Alpha gives it a valuation grade of a B-, which isn't terrible. That's definitely a passing grade. And we can see that the PE ratio, like we talked about just a moment ago, 15.37 for the forward PE. Not as low as Altria Group. It's not in the single digits, but 15.37 is nothing to turn your nose up at. That's still a pretty affordable PE ratio. And then this also happens to be 15.78% lower than the company's 5-year average PE ratio, which is no surprise because like we saw, guys, the share price of this company is coming down. And so when that happens, you can expect the PE ratio, the price to book, the price to cash flow to come down as well. And with that said, guys, moving on, price to book right here, forward price to book is 3.61. You know, ideally we'd like that to be between 1 and 2. However, as far as price to books go, we've definitely seen higher, guys. And then they only have a price to cash flow for the trailing 12 months. And that is 18.77. And the reason that is because I believe so far for 2021, LEG actually has negative cash flow. And that's why they're not reporting a forward price to cash flow right here, because for this year it's been negative, which actually, guys, will cause a little bit of a hiccup when we go over and do the discounted cash flow calculation for LEG. So I know there's a way to accommodate for negative free cash flows, but I haven't quite learned how to do that yet, guys. So what I'm gonna do for this calculation is instead of doing 2017 to 2021, I'm gonna do 2016 to 2020 and try and establish an intrinsic value for this company that way. So the very first thing we're gonna do, just like last time, let's put in the ticker symbol right here. It'll load this data for us right here. Now I'm going to go ahead, guys, and input the free cash flow. Just pretend these numbers say 2016 to 2020, okay? Just ignore these years right here. And I'm just gonna skip ahead real quick and do this so you guys don't have to watch me go back and forth, okay? Because it could take me a minute to get all that set up. So I'm gonna jump ahead right now. All right, guys, now we have put in the free cash flow for the last 5 years, 2016 to 2020, and that gives us a 5-year CAGR on the free cash flow of 7.88%. So just for kicks, we're gonna start out by putting that right in there, and that's what we're gonna use to project the future free cash flows for this company. And then we'll see what it comes out to, and then maybe we'll adjust and see how that affects the intrinsic value. So next, what we're gonna do, guys, is put in the net debt, the cash, and the shares outstanding. And once we have that, it'll give us an intrinsic value and whether or not this company is over or undervalued. So starting with the net debt, guys, let's go back here. I'm gonna scroll up and go over to the balance sheet. And I want to, actually, let's start with the cash because the cash is right here on top. So cash and short-term investments is, we're gonna use 2020 numbers. So 348.9. Go and put that right in here, 348.9. And then let's jump back over here and scroll down and find the net debt. And we're gonna put that 1715.8. And then last but not least, guys, let's put in the shares outstanding. So right here, 132.6. Okay. And actually, quick question for you guys before we talk about this. Do you guys use the net debt in your calculations, or is it better to use the total debt? I initially was using the total debt, but someone had told me that the net debt is better to use, but I'd be curious to hear what you guys think. If I'm off on using the net debt versus total debt, let me know. I wanna make sure I'm doing this the right way so we can get as accurate a calculation as possible. So let me know in the comments below. Now talking about the intrinsic value, guys. So it spit out a calculation of $77.15 for the fair value of this company, which means it is over 46% undervalued. Now remember, guys, this is based on 2016 to 2020 numbers, but we're almost all the way through 2021, and this company this year has done negative free cash flow. Like I said, I don't know how to accommodate for that, but to try and account for that, guys, I'm just gonna reduce this rate of free cash flow growth. Instead of 7.88%, maybe we'll be a little more conservative and say, in the future, maybe they'll grow by 5%, okay? And what that does, you can see it gives it a lower intrinsic value, but still leaves this company at about 35% undervalued, which is still quite a discount if you're buying it at this current share price. And furthermore, if we want to be even more conservative, guys, we can say that maybe they're going to grow instead of 5% free cash flow every year for the next, however many years, maybe they're going to go up by 3%. Maybe it's not much. And even with that, at an 8% discount rate or an 8% margin of safety, LEG is still considerably undervalued by 25%. That's wild. So based on this, guys, you can still be pretty conservative in your calculation and come to the conclusion that LEG looks to be pretty undervalued. And what we're going to do, similar to Altria Group, we are now going to jump back over to Seeking Alpha and go over to the ratings page and see how this compares to what the Wall Street analysts are saying. So our intrinsic value right here is 55.61. And once again, guys, we are very close to being right on target with the Wall Street analyst here on Seeking Alpha, who give it an average price target of $51.25, which is great. They're giving it a low valuation of $47, which is still about $6 higher than the current share price, and then a high share price value of $55 even, which is quite a bit higher than where it's at now. So overall, guys, I'd say our calculations are coming out pretty well if we're just comparing that to what Wall Street is saying. And all across the board, LEG looks to be pretty undervalued. And with that said, before we move on to the next segment in this video, I would be very curious to hear your guys' thoughts on the matter. What do you think about Altria Group? What do you think about LEG? Do you think these calculations are pretty spot on? Do you guys come up with different calculations? What are your thoughts on the current valuations of both of these companies? Let me know in the comments below. All right, guys, now what we are going to do is move on and get into a little portfolio update for the week. So this is the portfolio dashboard for version 4.0, guys. I'm very happy. I added a couple things here, probably a little bit different than what you saw last time we did an update video. So I added this monthly dividend income and the diversification by stock here on the dashboard page, and you guys will get access to this in version 4.0, which should be coming out a week from today. So be on the lookout for that. And you know what, guys? I actually forgot to mention this earlier, but I actually already have released this spreadsheet version 4.0. If you are a member of the Dividenders Discord community, then you already have access to this. All you need to do is go into the announcements chat, and there's a link to it right there. If you guys want to get this spreadsheet today and you're not in the Discord, all you have to do is join the Discord. It's super easy. There's a link to join in the description of this video. And essentially what it is, for those of you who have never heard of Discord or don't know what the Dividenders group is, it's basically a big group chat filled with dividend investors. We're up to over like 220, 230 members right now. It's really grown like a weed. And it's basically just a chat room where all of us can get together and talk dividend stocks and share ideas and share our portfolios. And we're all getting together basically and just bonding over dividend stocks on the Discord. It's been a lot of fun and a lot of really engaging members of that community. So I'm very thankful for all of you guys in there. Like I said, if you want to join it, the link to it is in the description and you can find this spreadsheet today. Otherwise, if you don't want to join the Discord, just wait till next Sunday. I'll be putting a link to it in the description of the video then. So anyway, enough rambling, guys, and back to the main point. So as far as the weekly portfolio update goes, we are doing considerably better this week today than last time we did an update video. And as you guys can see on the screen, last time we did one of these update videos, the market value of this portfolio was $30,639.88 with a total gain of about 2.5% and an annual dividend income of $1,509.36. And jumping back over to today, we can see that the total gain is about 2% higher, just over 2% higher, and we have gained almost $10 in annual dividend income just in the last week. And with that, guys, the dividend yield is coming down a little bit. It was in the 4.9% range, but as the market value of this portfolio has gone back up, the dividend yield has dropped down just a little bit, which is totally fine. We're still getting the same amount of dividend income, in fact, a little bit more. Honestly, guys, I'm just happy to see some of my stocks rebounding. It was getting pretty rough there for a little bit. So I'd like to see that continue to go back up just a little bit. Maybe not for all of my stocks. Like if Lockheed Martin can stay low, if Intel can stay low, I'd be happy there because I'm buying those every single week, which brings me to the next point. I want to tell you guys about my recent buys, basically what I bought this week. So similar to previous weeks, I put $50 into Intel. I also put $50 into Lockheed Martin. And then, guys, don't hate me for this, but I actually put $50 into AT&T as well. This is the second week in a row that I've contributed to my AT&T position, and I'm not exactly sure how long I will continue doing that. I really like the idea of getting this position to an even 100 shares, which should happen in the next, if I'm basically buying like 2 shares a week, that's going to take me going to take me another month and a half or so to get there. So really not too bad. And I don't know, there's really not much else in my portfolio that I want to pick up right now. I guess I could contribute to EPD or maybe could buy a little bit more Verizon. In fact, I probably should spend a little more on Verizon versus AT&T because I do have a pretty good weighting in AT&T already. I think it's currently, 6.33% of my portfolio, and it's getting pretty up there. So with that said, guys, I'm not exactly sure what I'll do next week. I could just as well actually pick up some more AT&T. We'll see what happens. Also, guys, as far as dividends go this week, I got a few pretty good payments. I got a payment from Johnson & Johnson. I got a payment from Jeppy, which is pretty nice. This is my first Jeppy payment, and it got me basically 1/10 of a share. Then I also got a pretty nice payment from Southern Company. And like I was just talking about, guys, as far as next week goes, my purchases, I'll definitely be buying some more Lockheed Martin. I'll definitely be buying some more Intel. And that third one, I could buy some more AT&T, maybe I'll buy some Verizon. I don't want to buy any more REITs, but I really have been liking WP Carey lately. I've been trying to read up a little bit more on this stock in particular and just become more familiar with the REITs in my portfolio, but I really like what WP Carey is up to. I wouldn't mind adding a little bit more of this. Realistically though, guys, if I'm keeping it real with you, I'll probably just end up picking up some more AT&T. And then next week should be a really good week of dividends, guys. I should be getting a payment from Chevron. I should be getting a payment from 3M. I should be getting a payment from Main Street Capital Corporation, from Realty Income, and I also think I should be getting a payment from Coca-Cola. So next week should be a pretty solid week of dividends, guys, and I think we are on track right now to be at over $100 in dividend income this month, which is exciting. That's gonna be a good way to finish out the year. All right, my friends, and that pretty much wraps it up for today's video. I know today was maybe a little bit different than some of the other videos, just in terms of how we're approaching looking at these companies. I think it was really fun to go in and calculate the intrinsic value of Altria Group and LEG. And I look forward to learning more about how all of that works so I can be more accurate with my calculations. But anyway, guys, before you click on to the next video, if you wouldn't mind doing me just a couple quick favors, I'd really appreciate it. First of all, leave me a comment below and let me know which stocks you guys plan to buy in the upcoming week. Also, number two, if you have not done so already, please don't forget to leave a like, leave a thumbs up on this video. I'd really appreciate it. Doing so will definitely help this video get pushed out to other investors here on YouTube who really probably desperately need to know the fair value of Altria Group and LEG. So help them out and help me out at the same time, and just hit that like button for me if you wouldn't mind. But anyway, guys, with that said, I will now get out of your hair. But thank you once again so much for watching this video, and thank you all so much for the support you show to me and my channel. It does not go unnoticed. I really appreciate all you guys. And also, I hope you guys have a great day, and I will see you in the next one.